Hi guys, welcome back to the channel. My name is Brad. This is Firefighters Financial Toolbox. Today I want to talk about something. I want to talk to you new investors, you beginning investors. I want to talk about the 5 biggest mistakes I think that beginning investors make. And I'm going to do them in order of the importance that I think they have. First thing is not investing at all. Now I realize we've just gone through a big downturn in the market. Things are tough, times are tough, I get that. I know a lot of young people have, a distrust of the stock market. They distrust Wall Street. They don't understand how it works. They don't want to get involved. But here's the thing, you guys, if you don't invest, you will never be able to build wealth. Yes, it's scary. Yes, stocks go up and down. Yes, you can lose money. It's not a sure thing, but if we look at history, over the long term, the stock market has always gone up. Now, it doesn't go up in a straight line, obviously. It goes up and down and it goes up. But if you look at it over time, it goes up. Investing is something that you should definitely consider doing. Before you're getting started, one thing you need to have is an emergency fund. Everybody should have an emergency fund. Right now is a perfect example of why an emergency fund is so important. With the pandemic going on and people being out of work for an unknown amount of time, a lot of people went to work on Monday and the next day they knew they were furloughed, or they were laid off, or they were just out of a job. It's hit every sector of our economy. It's unlike anything we've ever seen in any of our lifetimes. We didn't know what was coming. We didn't know what to do. Having the emergency fund is 3 to 6 months of necessary expenditures, you guys. That's enough to pay your rent, enough to pay your car payment, enough to pay necessities, food for your table. You don't need an emergency fund until you need it. So before you start investing, start at least building that emergency fund up. At least 3 months. Many people say anywhere from 3 to 6 months to a year, depending on how secure you think your job is. Getting into the market. Number 3, not keeping a long-term investment horizon. You guys, investing is a long-term project. It's not a short-term fix. You're not going to pick the winning stock tomorrow and be a millionaire. That's not the way it works. You build wealth over time. You continue to invest, reinvest those dividends. Your pot grows and grows and grows so that when you retire, you have enough to live on. That's the end goal. All right, so long-term investing. People that are long-term investors buy and hold. They buy stocks or ETFs, index funds, whatever your investment choice is. And we're not going to get into that today, but when you invest for long-term. That segues into number 4. Number 4 is do not try to time the market. Now, as you guys know, we just went through a huge downturn. And if you're an investor like I am, you're excited about that because you've been paying top dollar for these stocks and now the prices have fallen and we can buy more stocks for less money. How long is it going to last? Nobody knows. Trying to figure out when it's at the bottom is impossible. Just like trying to figure out how high it's going to go is impossible. People that work on Wall Street that think they know about it, they can't figure it out. And if the professionals can't figure it out, you're not going to be able to. What do? You invest when you have money to invest, and you keep it long term. It will grow. Number 5 is not considering taxes when you invest. Now, I know that there's several apps out there, Robinhood, M1 Finance. Robinhood is a great app. But there's one drawback to it. It does not allow for any kind of tax sheltered accounts. You can't start a Roth IRA on Robinhood. You have to have a taxable account. So anytime you make money on that account, you're going to be taxed on it in that year. Okay, that's a very important thing for you to remember. If you buy a stock, it appreciates, it goes up in value, and you sell it. You will have to pay taxes on those gains. Also, if you have a stock and it pays you a dividend, you will also be taxed on the dividend. Now, the rate for dividends can be lower than normal tax rates, but you're still taxed on that. If you used an app like M1 Finance, or you went to a discount brokerage and opened a Roth IRA, which I think every person in America should start a Roth IRA, because you're putting money in after tax. That means you've already paid tax on it. It's your money. You put it in there, it grows tax-free. When you take it out, it's tax-free. Now, I don't know about you. I'm not a tax expert, but with all these things going on, all these stimulus packages that they're doing, eventually somebody's going to have to pay for that. You and me are going to be the ones that pay for it, you guys. Now, I don't know when that's going to happen, but somehow they're going to have to take taxes to pay for all the stuff that has happened. So having an investment pool of money that is tax-free is going to be much, much more important to you later on. Number one, not investing at all. I think the main reason a lot of people don't invest it is A, they either don't trust the stock market or the government, or they have a fear of losing. Now, the fear of loss is a real thing. You're putting hard-earned dollars into an account that can go down. All right, I understand that, you guys, but it's necessary to build wealth for later. Number two, not having an emergency fund. Everybody should have an emergency fund. Just like everybody should invest in their adult life, everybody should have an emergency fund in case something bad happens. Because unfortunately, it does. As we're seeing right now with the coronavirus. Number three, keep a long-term investing horizon. Think and invest long-term. Think about the investments not as something that you're going to make money on in 3 years or 5 years or even 10 years, you guys. Think about it as 20 years, 40 years in the future. That's when these investments are really going to be worth a lot of money to you. Number four, don't try to time the market. Okay, you guys, nobody knows when the bottom of the market is. It's already come back some. Could it fall again? Yes, it could fall tomorrow. It could fall 30% tomorrow. I don't know. If you have money to invest, invest it. Because as we've seen over the long term, the stock market goes up. And since we're thinking long term, we know we have time to do that. So rather than trying to figure out when the best time to buy is or when the best time to sell is, we just buy and hold. And last but not least, we think about using tax advantage accounts first when we invest. What does that mean exactly? If you have a 401k at your work, and particularly if your company makes a match, you guys invest at least to the match. It's going to do a couple of things. First thing it's going to do is, if you do it in traditional, it's going to lower your taxable income. So you're going to pay less taxes on the money that you make. If you have a Roth option, yeah, you're going to pay the taxes on it, but that money also is going to grow tax-free. Once you get the match, you guys, max out a Roth IRA. The nice thing about a Roth IRA is you can get it from a discount broker. You can keep your costs low. You can control the investments. So you have a lot more investment choices than you probably do in your workplace plan, your 401k, your 457, whatever they have. And once you put that money in, it grows tax-free. But it's important to take advantage of my tax-advantaged accounts, either paying taxes later on them or not paying any when we take the money out. These are important things to consider. All right, you guys, those are the 5 things I think are most important to beginning investors. What do you guys think? What did I miss? Let me know in the comments. If you got something out of this and you like it, give me a thumbs up. If you're new to the channel and you haven't already subscribed, you guys, hit that subscribe button, ring the bell. You get notified each time I make a video. Try to make a video at least once a week. And we talk about investing, retirement, taxes, and financial well-being. All right, you guys, thanks a lot.